Welcome to Econoday Unplugged. Today is Tuesday, September 25th, 2018. With me today are Jeremy Hawkins in London and Mark Pender in the U.S. We are all Iman Picker, Econoday's chief economist, and we are all vigiling the FOMC announcement tomorrow.
Yes.
Mark?
Yes. Where do you start? Well, you start with a rate hike. I mean, it's almost certain. So many indicators we're having points to the risk of overheating. Just consumer confidence this morning, really very strong. The Fed has signaled this. It's in the books, and it's as good as done. What we'll be looking for is any indication in their forecasts or in Jerome Powell's comments that it may go even further higher.
Mark, is there any chance whatsoever that we could see a 50 basis point hike rather than 25?
Wow, well, that's a good question. I don't think so. I think they have to stick to their plan because their plan is so well laid out and so clear. And there's always the risk now when rates go up. This word recession, people say, well, how can we be talking about recession? And the reason we're talking about recession is because short-term interest rates are going up. And if they went up too fast, I think that would risk the Fed being seen as perhaps irresponsible. So I really don't see, and we're not having as much inflation pressure. Actually, we're really having very little inflation pressure. So there's no urgency, I don't think, for a 50 basis point rate hike. But it'd be interesting. That would be a great comment for the press in tomorrow's press conference for the chairman.
Needless to say, the FOMC's forecast will be closely parsed, as will everything that Powell says tomorrow in the press conference.
Yes, it's going to be an interesting, like you say, a very closely watched event. And really what we're looking for, I think, is I think where it's more on the margin. I think what Jeremy's question was, it was kind of a shock, but I think it's going to be more of a margin. It has to be really because the Trump administration is so, it's already come out and told the Fed to slow down. So I think what we're going to be looking for is whether or not there's one more penciled in after tomorrow's rate hike. And I say that with confidence. There's one more penciled in, and that will be probably in a December meeting when there's another press conference and another set of FOMC forecasts. And that would be following all the rate hikes this year. 4 of them are going to be scheduled, and they hit on each one of these conferences. Now, next year, there's only 3 right now that are penciled in on those FOMC forecasts. And these are forecasts compiled by the Fed, the Federal Reserve, and the district banks. This is the entire institution's forecast. If that moves up from 3 to 4, that would be a big negative for, I believe, risky assets, because it's going to signal a greater chance of a recession.
Sorry.
Mark,
yeah?
The press conferences go to every meeting beginning next year. They won't be able to say, okay, when they have the press conference, they'll increase rates.
That's right. That's going to pass.
And so it's going to have a very interesting.
It's going to make rate hikes or rate changes in play every meeting now.
That's right.
Which is going to make for more volatility. It's going to, that might be something that they may regret, or they could regret in their transparency efforts. But it does give the Fed more prominence, and it gives the chairman more prominence. So that's another positive. And to have the Federal Reserve is really an institution right now that is, on the conservative side, to say the least. We have so much froth, perhaps, in the stock market, and so much economic activity, so strong that it's almost like a voice of reason. So it's probably good to have more than less.
Well, also, if you look around, you will see that other major central banks hold press conferences after every meeting. So the Fed has lagged in this respect.
Yeah.
Mark, can I ask you a question, say, in terms of transparency with regard to the dot plots or dot charts, whatever you want to call them? I've seen there's been some talk about perhaps, changing those, or perhaps even, actually annotating the individual dots according to, who in particular was forecasting the rate at that level at the time. Do you think there's any mileage in that?
No, I don't think so. They're not moving to a monthly FOMC forecast yet. I think they would probably do that before they remove the anonymity from the forecasts themselves. The forecasts really aren't that. There's not a lot of separation. There's no shocking difference among them. They're all within, a reasonable range, and this reasonable range is definitely, moving up as far as interest rates go. So. How much can the stock market withstand fighting the Fed? And what's interesting, if you look at the stock market's reaction to the Fed this year, going into all these rate hikes, it was very little reaction. And sometimes the market actually rallies into a rate hike. And I think that has to do with how transparent the Fed has become, that everyone knows exactly what it is that they're going to do.
Jeremy?
Okay. Well, I don't really have too much to say about sort of interest rate policy over here, since that seems to be pretty well set for the time being, be it in continental Europe or the UK. What is driving investor interest, so obviously outside of the FOMC, are some of the politics. And I've got to kick off with the latest on Brexit, because that really is starting to boil up into something, well, potentially very important in the short term, let alone next year when we're supposed to be actually leaving the European Union. So last week's informal European Union leaders discussion in Salzburg, that was supposed to be a much more conciliatory affair, with the idea of coming out with some kind of general broad brush proposals which could be signed off when we get to the next full EU leaders summit. That's due on October the 18th. As it turned out, though, it turned out that Prime Minister May really came under quite considerable attack from most of the other EU leaders, and it's really gone down as well a significant surprise that the disagreements between the two were blatantly obvious as they were. Now, it's left May on something of the back foot as to what she's going to do now. And okay, we've got the next meeting to look forward to in October. But before then, there's going to be some very testing times in domestic politics. Now, we've had the Labour Party conference, so the principal opposition party. They've been holding their conference this week. Their Brexit policy has been in something of a complete mess, just like the Tories. But what appears to be emerging at the moment is that it seems almost certain that they will decide to vote down Prime Minister May's Chequers deal. This is even assuming she can get the EU to agree with it in the first place, but let's just assume that does happen. The opposition have indicated they're going to vote that down. Now, the chances are, if they were to do that, because the government doesn't have a majority in Parliament, the thing could actually disappear. If that happens, then the Labour Party would no doubt hold a vote of confidence in the Prime Minister, which, if they were to win, we could get early general elections happening before the end of the year. Even if they don't actually manage to get a vote of confidence, what they've indicated is that there's a very good chance now that they will be pushing to hold a second referendum on the whole Brexit deal. Now, if this were to happen, would they get it through? Well, it's unclear, because don't forget that it's not just the Tory party, the government, which is split between Brexit and anti-Brexit people. We've got the same for Labour as well. But it really does open a whole new can of worms. I think, not long ago, the idea of a second referendum was essentially a non-starter, but now it looks to be very much coming into the fore again. Next week,
Jeremy, I have a question. I'm sorry to interrupt. It surprises me that there is not a political divide on Brexit. It is a nationalist, I think, right? It was the first of the shot across the bow, really, and we're seeing right wing in Sweden. We're seeing a very strong, but this doesn't. It's a completely politically neutral
Pretty well it is. I mean, I think both the Tory party and the Labour Party are as near as damn it split down the middle, which is why it makes the whole thing so complicated. It's not simply we can say, well, Conservatives want this and the Labour Party want that. That is nothing like the case, which of course makes it so difficult to say what's going to happen when we come to any particular parliamentary vote. But it does seem now from what the Labour Party have said at this conference is that they're looking to vote down the current Brexit proposals. And if that happens, then the idea of a second referendum or an early general election, very much comes a realistic possibility again. So that's sticking too much on the politics. I should mention that the Conservative Party conference that will start this coming Sunday, and the Prime Minister May is due to make her party address on the Wednesday, and that's going to be a huge address. Somehow she's got to try and unite her party around her, because if she comes out of that badly, the chances are there will be a vote of confidence in the government, which could go. So next Wednesday will be a hugely important address by the Prime Minister. Aside from that, I should also mention, although it doesn't look like it's going to be as much an issue as it did a short while ago, and that's the Italian budget. The current government is due to present its budget forecasts, both deficit forecasts and economic forecasts, this Thursday. And it's due to be followed by its presentation of a draft budget to the EU Commission by October the 15th. Now, in a nutshell, since we had this new five-star Northern League coalition government coming in March, the end of March, it's been really unclear what Italian fiscal policy stands for, bar the fact they want to reduce taxes and they want to spend a good deal more. Now, why does that matter? Well, it matters because Italian government debt is already the second highest in the European Union. It's running currently at about 131% of GDP. And the EU Commission's line is that, look, you've really got to do something about it and get this debt ratio down. Now, were this government to come out and suggest that, well, we're not interested in reducing our deficit, we're quite happy to spend more and tax less with a view to getting the economy going again, and the EU Commission actually gave the nod to that, then it's going to open another can of worms, because we're going to see all these other governments across the European Union say, well, hang about, you made us reduce our budget deficit, etc., why aren't you making Italy do the same? And it becomes all the more important because next year, of course, we can have European parliamentary elections. And that's going to decide essentially the new lawmakers for the European Parliament. So what comes out of Italy and how the rest of the European unions take what EU Commission finally says is going to be instrumental in terms of the medium-term outlook for both the European Union politically, but particularly for European Union markets. So there's a lot of politics at the moment, but there's plenty of potential for volatility both in Europe, but particularly continued volatility in UK assets.
Thank you, Jeremy. Thank you, Mark. To be continued next week.